Okay, everyone, we're going to go ahead and get started. We do still have quite a few people trying to get in, but we're going to go ahead and get started. As you can see, we do have a full agenda tonight. So I'm going to go through this agenda real quickly. We'll get started, be sensitive of your time, but we do have some really exciting information to share with you, and glad to be able to keep everybody up to date. First thing we're going to talk about is talking about the dark court management strategy during the coronavirus crisis or situation. And I'll lead that discussion, and it's really meant just to give you an idea from our management company standpoint, how we're managing the properties, the direction we're giving to the properties, how we're working with the individual tenants, etc. So we'll go through some property updates for each property, and again, I think you'll be pleasantly surprised. While we expected maybe a little bit more worse news, we're actually pleasantly surprised that it's not as bad as we thought it was going to be. And we're really proud of the efforts that we're making in order to get the properties to perform to their maximum ability. I'm then going to turn it over to Darwin after our property updates, and he's going to talk about our Valley Center project and give you a construction update. We've got a short video we want to share with you that'll just show you some of the construction that's going on, but really excited about that as well. Darwin's then going to talk about investment opportunities for our DGRE partners. And that is really where Darwin is key in this, because Darwin is a syndicator that has been through ups and downs in the economy and crisis on at least 3 different occasions that I know. And that really goes a long way when you're operating properties and investments for people that you want to maximize. And Darwin's going to share some opportunities that we do expect coming down the road and what we're working on. And last but not least, Darwin's going to give us a state of the market address and kind of talk about where we were 2 months ago, where we are currently, and where we are now, and what do we see coming in the near future. And then, of course, as I said, we'll take then as many questions as we possibly can. So let's get started. Okay, as I said, we're really focusing on 4 main goals. And that is, as you can see here, we're educating the residents and the staff on common sense measures. Just try to minimize the risk of exposure to the virus by providing specific protocols. We are still initiating daily cleanses and frequent sanitization of commonly used services, and provide personal protective equipment for the staff. And it's really important, because what you have is anytime you have a crisis, we have people that are just I don't mean to say they're freaking out, but they're just, people don't know what to expect. Next part of that strategy is to continue and excel at all property services to meet the needs of our residents. As I talked about, we still have trash service, grounds cleaning, work orders, etc. that have to be taken care of. We've focused our efforts, just as we talked about last month, we're really focusing our efforts on renewals to compensate for our reduced leasing traffic. And we're handling all of our leasing traffic with virtual tours and online application processes, which we're really proud of, because we think we've really streamlined that and have been able to meet the needs of our people trying to lease at our properties. We're also providing some incentive for residents to continue to paying early. We're providing a small amount off of their monthly rent if they pay by a certain day. And that has really helped as well. Of course, it all comes down to maximizing income, reducing overall expenses, and trying to help preserve the cash. We've done that by stopping or reducing our vendor services, landscape packaging, deliveries. And as I said, we're doing early pay incentives. So I want to start on property specifics now. And I just want to mention one thing. We really went through a lot of detail on these properties last month. I'm not going to go into so much detail. This is really meant just to kind of show you a 3-month trend and then where we are as of today. So when you see these numbers and it says May, obviously those are not ending numbers. All of the May income numbers you see are going to be as of yesterday, which is May 11th. And I'll give you an idea of how that is trending toward what we're seeing. So Amber Vista, again, great job here. You see the occupancy is absolutely increasing from the low 90s to the upper 90s. Income really steady through February, March, and April. Expenses holding steady in the mid 50s to low 60s, and your net operating income from the low 50s to the mid 50s. I want to point out that the May collections as of May 11th represents about 87% of our April collections. Really proud of the staff too, because in any month where a property can close out the month with 0 in delinquency is just terrific. And especially in the situation that we're in right now, Amber Vista deserves a big hand of applause because they were able to close out April with $0 in delinquency. Spectrum continues to do the installation of the new infrastructure for the cable TV and internet access, which will be a great amenity for our tenants moving forward. At Amber Vista, the CapEx project has been completely finished now with the completion of the parking lot in April, which is parking repairs and striping. So again, what I want you to do as we go through these slides is just take a look at our occupancy. We're able to maintain that. Take a look at the income, and then we'll talk about where we are on income as of today, May. Moving on to Brookside. Again, occupancy, high 90%. So again, great job in maintaining those folks. The income, we're really making good strides in the upper 280s through March. April, we did take a hit because of the delinquency. Again, it's just quite a few tenants were not able to pay their rent. I do want to point out though that even though you do see a 17 grand drop in income, it does not necessarily mean lost revenue. In some cases, we have residents on a payment plan. We also have residents who have deferred April or in some cases even May rent. And what we've done is spread that amount that they're deferring over the remainder of their lease term, which will actually mean increased rental income for future months. One of the things we're excited about too is that the city of Arlington is offering a program to tenants that will pay a portion of their rents. The biggest difference in this program versus other municipalities is that the money is going to go directly to the landlord instead of the tenant. At Brookside, we're registered with the city and are ready to take payments, and we're pushing every resident to apply.
Brian.
Yes.
Also, we cannot collect late fees, correct?
That's absolutely correct. So the income hit that you see is not only people are not paying their rent, but we cannot collect late fees. That's absolutely correct. Good point. Okay, moving on to Gold Creek, which is the newest apartment building as part of the portfolio. Just a reminder that Darcorp took over and DGRE acquired this property on February 21st. So when you see February numbers, it's really only 8 days that were owned by DGRE. As you can see, we're in the 90%, mid 90% in occupancy. Income, again, you see in February was only 8 days, but you can see that continuing to climb and had a really good month in April, despite the situations we were dealing with. And then in May, currently as of yesterday, we're at 256. Expenses, of course, will level out after we've been on the property for 3 or 4 months, and you can tell where the net operating income is going. As of yesterday, the income was at 256, and that represents right at 92% of April collections. But the good news, that's about 4% ahead of the first 10 days in April. So the trend in May, a little bit to our surprise, is that we're ahead on almost every property than we were at the same time in April. Riverbend, again, you see high 90% occupancy. Income, as you can see here, we were really trending up in January, February, and March. In fact, March was our highest month ever in income levels since we have owned Riverbend. We did take a hit in April down to 157. And I would tell you that collections at Riverbend, without a doubt, are a challenge. We do have a certain tenant base here at Riverbend. It's a little bit higher percentage that just refuses to pay and intends to write out the eviction moratorium. And we're working with them as we can to put them on payment plans. As I said, we're also deferring rents to later months, but we just do have a certain faction at Riverbend that we're going to have to deal with. I will tell you that May collections as of Monday, yesterday, the 11th, represents 81% of April collections. But again, good news, that's about 4% ahead of where we were the first 10 days of April. Expenses, you can see holding steady in the high 70s and low 80s with net operating income consistently in the 90s until our little hiccup in April with our collections taking a hit. Moving on to Silver Creek, one of the properties I'm really proud of. As you can just take a look at the occupancy, you can see that it's starting to climb up. One of the things that's really positive here is that Silver Creek has really done a great job with the virtual tours and leasing. You can see that the income was getting into the high 290s, and then we took a dip in April again. This is a result of not being able to charge late fees, as well as some tenants not being able to pay. But look at the May occupancy numbers. In 1 month, we were able to increase almost 4.5%, which is really a testament to the property and the virtual leasing that we're continuing to do. The May income numbers you see again is as of yesterday represent 91% of April collections. And again, that's about 4% ahead of the first 10 days in April. May leasing is strong and will result in a 4.5% occupancy increase over April. Also want to let you know that the CapEx project continues as needed, but we're really only rehabbing those units to stay ahead of the leasing. So as we are leasing, which you can see we are, as we're leasing, if we need a unit, if we need to turn a unit and it's available, we're turning that just to stay ahead of leasing, but we're not moving forward with all of the units just to try and preserve some cash. Okay, moving on to 1019, another great success story here. When Darcorp took over this property in early January, on the first of the year, they were about 69 to 70% occupancy. Their average monthly income was about $98,000. Their average monthly expenses were about $70,000, and their average monthly NOI was about $28,000. As you can see, our occupancy is just continuing to climb and will be over 87.5% in May. Income numbers, high 119s to low 20s, currently at 95. Again, that's about 80% of our April collections. I do want to point out too that the April collections took a little bit of a hit due to the fact that 100% of our Airbnb reservations were canceled. And of course, we were waiving the late fees. So that's the reason. So even with losing the Airbnb income and the late fees, we were still at almost 119 in April, which is a great testimony to what's going on down there. Expenses holding steady in the low 60s, net operating income holding steady in the mid 50s. We are continuing to rehab units per the original CapEx plan. I'm proud to say that Darcorp has significantly reduced the cost of the rehab by reducing the scope of work, but we've been able to maintain, even though the scope of work may have been reduced, we've been able to maintain the rent that we're charging there. And that is mainly due to the use of in-house labor. So again, great success story, not only for 1019, the property, but for those people on the line here that are investors in that property. Villa Creek, real steady performer, has been for a long time. Again, as you can see, high 90 occupancy, income steady in the 150s, expenses steady in the high 80s, net operating income again in the mid to high 60s. The income you see in May here, the 129.8 number, again, as of yesterday, represents about 86% of the April collections. Villa Creek also was able to close out April with 0 in delinquency. Just a great job by the staff there. I have nothing but good news to share with you in regards to the rehab from the tornado buildings as well. The rebuild of building number 12 is almost complete from the 2019 tornado. It's been a long time coming, but we're glad to see that taking place. And we have already begun pre-leasing these units for a June 1 move-in. Also excited, even better news. Through some restructuring as we rebuilt building number 12, and by moving the boiler to another area, we are going to gain a 1-bedroom, approximately 750 square foot apartment in building number 12. This is going to be absolutely great for the property. The rent on that unit is going to be $920 a month. That's about another $11K per year, or guess what? About another $220K increase in property value. So just great news for the property, great news for the investors. Building number 11, which is 6 units, will be completed shortly after that, late June, early July. And we have already started pre-leasing here in mid-May for those units as well. So I know everybody will be excited for Villa Creek to be back online fully. Southwest, again, mid to high 90 occupancy, income mid to 50s to low 60s, expenses in the high 30s, net operating income anywhere from 15 to 20. I apologize, I don't have the final numbers for April. We just haven't finished those financials at this point. The collections you see, the 35 number in May, again, as of yesterday, represents about 15% of April collections, but I want to remind everybody to keep in mind that many of the tenants at Southwest pay on a weekly basis. So if you really look at this, the property is actually right on track to approach or equal in May what we did for the April collections as well. So don't be too alarmed by that number. Also good news that Southwest was successfully removed from the flood zone through some great efforts by our staff, which will result in a little over $17,000 a year in flood insurance cost savings. All of the exterior rehab work, including apartment signage and exterior lights, are done. So again, great job there by that property. 2405 at Park Row. You see mid-80s occupancy, income holding steady in the low to mid-30s. In fact, look at that May number. Even in May, only 11 days in May, they've already exceeded the collections in May for what they had in April. So again, great job by the staff there. Expenses, as you can see, they made a special effort in April to minimize the expenses to preserve cash, with your net operating in your high teens to low 20s. And again, as I said, the May collections are already 105% of the April collections. 2405 at Park Row is also in Arlington, is offering that same program where the city will pay a portion of their rents. 2405 at Park Row has also registered with the city, ready to take payments, and is pushing every residence to apply. Holley 90, again, consistency here. 94% occupancy, high teens to low 20 income. The May number, again, represents about 87% of the April collections. So we're ahead of pace of where we were in April. Expenses in the 3 to 4s, net operating in the mid-teens. Kainani, again, you can see the occupancy numbers, income, mid to high 20s. At this point, as of yesterday in May, a little over 17,000 in collections, represents about 70% of the April collections, but again, just slightly ahead of the April pace. So that is good signs. Expenses, 4s and 5, consistently. Net operating income, high teens to low 20s. So again, excellent job on consistency there. Ridgemar, and again, I apologize, this is a little incomplete. We'll be glad to answer any questions that you have. The financials are just not complete. We're actually switching the property, the software, so we just don't have all of the numbers yet. But I do want to provide you the most important, again, which is what I'm trying to point out tonight, is that income is remaining steady. While we do have a slight drop, you can see that they've already collected a little less than 40,000 in May, which is about 87% of the April collections. So we're excited about the pace because we're definitely ahead of the April pace. The new leasing office is now complete at Ridgemar. Also want to let you know that the Ridgemar is renovating an old maintenance unit into another apartment, so we'll gain a unit there. And with 2 units leased for June, Ridgemar will soon be 100% leased. I want to close out here with the property performance on just some proactive management steps that we're taking here at DARCorp. And then the last thing I'm going to talk to you about too here is going to be just a feel-good story. What I've tried to do is ask the managers to really reach out to the residents and let's stay in touch with them. Let's see what's going on in their life. Let's make sure they understand that we care about them. So I have a kind of a heart-tugging story that I want to share with you. But right now, all DARCorp properties continue to provide all tenants with the most up-to-date assistance programs to residents. I think this has been a huge success on why our numbers have not dipped as could have. And we continue to be tenant advocates to assist with accessing and or completing assisting applications. Just to give you some examples, this includes, for example, how to apply for unemployment. And we're literally leading people through the process. Here's how you do this, providing them with the links and helping them get their information together. How to check on the status of their stimulus check. How to get help from the local Salvation Army or local municipality programs like we see at both 2405 at Park Row and at Brookside in the city of Arlington. So we're really making a concerted effort to reach out to them, stay in touch, how can we help, and providing them with the assistance needed so that hopefully they can continue to pay their rent. While the offices at all of the properties remain closed due to city, county, and or state mandates, we are working on a reopening plan. We expect that to be soon. So we need to be prepared for reopening, and we have guidelines in place to make sure that we can handle that process. As I spoke a little bit about earlier, starting next week, all of our properties will be implementing a plan to start catching up on the work orders. For the past 4 weeks, we have only authorized and completed work orders for life safety issues for a very good reason. Starting next week, we're going to prioritize and start getting involved and fixing some of those work orders to get caught up on them. One of the heart-tugging stories I want to share with you tonight, and again, these are things that are happening on, some of these things have really good stories that I could share just about every property, but I want to give you one example that happened at 1019 this past month and how our proactive approach is really helping the property. At 1019, this reaching out has resulted in an elderly woman being able to remain at the property and close to her son and grandchildren, as well as a new lease for the property. This lady lived with her son and grandchildren, but was convinced she would have to move to a different property as 1019 had no one-bedroom units. She needed to move out so that they had room to live. She was fearful that she was going to have to leave the property and be away from her son and grandson because we didn't have any one-bedroom units. However, we worked with her, and after discussing with the manager and management, we were able to work out a situation and get her into a 2-bedroom unit where she could remain close to her son and grandchildren. And not only is she thrilled, but the property gains a new lease with a forever grateful resident. So again, just an example of how we're being very proactive and reaching out to every resident as we have time and just checking on them. How are you doing? What can we do to help? And we think that's meant a lot to our success. When we had our meeting in April, we told you that DARCorp had applied for the PPP, which is the Paycheck Protection Program. I'm happy to give you an update in that DARCorp was approved and funded for the Paycheck Protection Program. Just a reminder, this loan was designed to provide a direct incentive for small businesses to keep workers on payroll, and we've been able to do that. The Small Business Administration will forgive all or a portion of the loan contingent on using those funds for approved expenses, payroll, rent, mortgage interest, and utilities through an 8-week period following receipt of the funds. And here's why it's really important. On-site property staff will be paid from these funds for an 8-week period. Why is this helpful? Because using these funds for 2 months of payroll means we could drop revenue by 20% and still break even on the property. So again, it was a good program. We took advantage of the program. Brian Johnson, as you all have heard, really worked at breakneck speed in order to get that in, and we're thrilled with the results of that. So having said that, I'm going to turn it over to Darwin here to talk about Valley Center. But before he starts talking, I want to tease you with a little video. And this video is just kind of gives you an idea of some of the collaboration that's going on at Valley Center, as well as some of the construction pictures. So keep in mind that what you're seeing is really before. This is not the after. This is currently what's going on. And we'll continue to share updates so you can see the progress.
So we're going to do a little walking tour real quick, but just so you know, we're going to go out to the lobby, and this is what it's going to look like. We're looking at tile on the floor around the sides here. We're going to have carpet in the middle, and then down the center we're going to have a wood tile plank, so it ties in the woods and the grays. Going to be gorgeous. We're going to have like 8 different sitting areas in here so that people can relax and use this, and also wait for the training room. I also want a video video screens for building signage and directory, but then when we're having our meetings at night, we can also have it running on that video so people can sit out here. If they need to come out and talk, they can come out and talk. So we've got this beautiful building. I'm gonna make a quick note. Because of how we did this, we got 6 months rental guarantees by the seller. So anybody that's not paying rent this month, next month, or for the next 6 months, we have that taken care of. So our income stream is level. And not only that, we've done some creative things with renegotiating leases. So we've got higher rates on a lot of the leases now. So our cash flow is even going to be better and accelerated. Even in this COVID crap era, we're still doing great. And so we're going to keep on moving on that.
Again, this was a team effort. As you can see, the team was together talking about the construction that's going on. So I'm going to turn it over at this point and for Darwin to talk about our Valley Center update.
Okay, can you hear me okay?
Absolutely.
Okay, good. First off, right before we closed on this, we negotiated a rent guarantee. For 6 months, we planned on, I was arguing that, hey, there's a possibility for 6 months, we could be down in revenue 30%. From what we're seeing, both in the apartments and in the office building, is that was a very, very conservative number, but at least we got it in there. And so the benefit of this is we've used this now to our advantage. Because the seller is guaranteeing rents, when there are tenants that are saying, hey, we can't be in there, we're having problems, we're struggling, whatever it is, then we can go in there and renegotiate with them. And rather than giving them free rent overall, what we've done is we've said, okay, we're going to waive 2 months worth of rent, but we're going to take that amount and amortize it over the remaining term of the lease. So what we've effectively done is we have the seller paying the rent for 2 months and then a rent increase for all the tenants that decided to take that, and have a rent increase for the rest of the remaining term of their lease. So we're already bumping up rents because of that, getting them used to paying a higher rent. So when it comes down to lease negotiation and renewal time, they're already used to paying something higher. So that has been a huge benefit for us, is basically helping us bump up rents even in this crazy time. We did have one tenant that vacated, and she was a small independent person, and she just moved in 6-8 months ago, and so she couldn't continue. And it was space that I wanted to use for Darkor anyway, so we went ahead and let her out of her lease. We also had one tenant that was a travel agency. He did custom travel tours, books them out over a year in advance to things where you go do the Jane Goodall experience down with the gorillas in the midst and things like that. So he completely canceled, had refunds, but he was a real, I'm going to say, upfront guy. He called, he was very proactive. He said, I don't have any income coming in. I don't have any of this. I don't know how I'm going to survive. But he offered up. So what he did is he bought out of his lease. So he paid 50% of the remaining term of his lease and just paid it outright to buy himself out of the lease, which I thought was a real good thing. And I'll recommend him as a travel agent for the cool things he does anyway. And the best part is that our offices, we should be in there in less than 30 days. And when we do, that's another $8,000 a month or so in rent that Darkor would be paying. So rent collections are going good. We'll be solid on that. Go ahead and go to the next slide. Just staying on rent for one more minute is we're now going through, and once we get the remaining amount, we know exactly who has not paid, we can't renegotiate or can renegotiate, then we can go through and draw the rest of that money. So we'll be over 100% collected when this whole thing is said and done. Our CapEx programs, we've had some great progress on that. We've been getting creative and looking at that. The roof the atrium roof that we were going to replace was about $300,000. And so we've now figured out another solution that will work add energy efficiency, and get it done for about $50,000. So we're saving $250,000 on that roof, which is spectacular. Elevators, those are in progress. Signage is in progress, so getting bids. HVAC, we're going to rebuild the air handler, which is a relatively simple thing to do. It's expensive, but relatively simple. And we have a maintenance contract with our HVAC company. So we'll basically guarantee 99.9% uptime on our air conditioner. And it's also in there that if it goes out for some reason, they can bring out on a trailer a secondary air conditioner to hook up just to keep the building cool, just in case of problems. Our concrete parking lot, the concrete repairs have been done and the restriping has been done. We added dumpster enclosures and those are almost complete. They might be complete as of today because we had to move where the dumpster was, put concrete pad in front of it, put it on there, and actually have concrete walls around both the dumpster and the recycling dumpster that we had to add as well. We're in the process of getting bids for our landscaping. Lobby, we're making final decisions now, but we've also found a way to save $50,000 on the lobby as far as what we're doing on it. So, here we are, we're saving so far $300,000 just on our CapEx program. Bathrooms are about 15% complete. Always been done on 2 floors, and we ordered the carpet today. And so that should be here in a couple of weeks and installed and done. And lighting, with that extra savings that we have in there, we're going to replace the LED, all the lights throughout the whole building. And yes, that saves electric, but a big thing is because those lights put off heat, it saves a lot on our air conditioning bill as well, from having to cool down those rooms with the lights because of the extra heat. So on our CapEx program, that's going great, ahead of our budget, well below our budget. Timing has just been a little bit longer because of the delays, but I don't think we're that far behind on the CapEx program. Next one, Brian. Now, because of all of that good news, we are actually starting distributions on Valley Center. Once we get our funds from the previous month, we're over 100% collected. And then that way we can start doing distributions on that. Now, we do have a couple of spots left because everybody pulled money out, didn't want to invest in anything, yet this is still a spectacular deal. We have a couple more spots left. And if you want to get in on that and get your distribution immediately, then definitely call David and do that. Speaking of distributions, I want to also, and real quick, I just got a text. If you're interested in taking one of those last couple of spots in, give an email over to David, real simple, David, D-A-V-I-D, at darwingerman.com. For those of you who read it, it looks like Darwinger Man. So that's a little joke, sorry. And so give him a call. And on distributions, we're also going to start doing distributions. We did a distribution this month on the Crossing Apartments because that one's still going solid. We're going to start distributions at Amber Vista because that one's in a solid position. So between those 3 properties, we'll be doing distributions. Villa Creek, we will start doing that one as soon as we get insurance money for our lost revenue. And even though our revenue was up, we still get paid for all of those down units at Villa Creek. So we'll start doing distributions on Villa Creek as well. So the whole idea as far as stopping distributions is to preserve cash to protect the asset, because our number one goal is to protect your investment. And if that means we have to delay a little bit to make sure that we have enough cash in reserves, depending, because we did not know exactly how bad or how good this coronavirus issue is, because that's going better than we anticipated, we can make sure that we have the amount of cash we need available to protect the assets and start doing distributions again. So we'll be doing those as well. Next one. We also, I'll go ahead and plug this real quick. We have not rolled this out yet, but we started another fund along with Merrill Calliser, and it's Inficap, and it's going to be a 506c for accredited investors, and to invest in value add and distressed assets here in DFW. And we've got plenty of time to get this going. So we've been rolling this. We haven't rolled it out. We've been preparing everything and getting it ready. And just for those of you who are unaccredited but still sophisticated investors, the last 2 properties we did were accredited only. We will have some deal within the next 2 months that is a 506B to allow our unaccredited partners that still want to invest to get in that. So we've got Inficap coming out with for 506Cs, and we will have some other property as well. Next slide. Market assessment. Isn't this an absolute ridiculous mess? I am not going to pontificate on my feelings regarding all of this crap, but bottom line is this is a market correction. It's funny, every about 25 years, there's a major market correction, and about every 7 years, there's a minor market correction. It happens, and it's always something different. Nobody could have predicted coronavirus. That was nowhere on anybody's radar. A virus shutting down the world, not even possible, and not in anybody's underwriting or anything else. But we did, part of the reason that we are conservative on what we buy and how we fund, et cetera, is to be prepared for things like this. So this is a correction based on external global factors. And when something happens like this, instability causes everybody to say, stop what you're doing. Everybody stop. Let's figure out what this is doing. Let's see how bad, how good, whatever this is. And so everybody pulls their money off the table and sits there to see what's going to happen. This is actually good for us. It turns this into a buyer's market rather than a seller's market. We've been in a seller's market now for years. With the money on the sideline, that opens it up to a lot more opportunities for us to buy. Now, unfortunately, the hardest hit property is going to be hotels and retail. Retail and restaurants and hotels, they'll fail. I've already been looking at CMBS numbers and Fannie Mae foreclosure numbers, and really what's hit the most is retail. Retail is getting killed, and there's already been a lot of loan defaults and a lot of discounted note sales. So that's going to be coming up, but it's not hitting. It hasn't hit, and it won't hit as hard in apartments. So that will be good. The problem we're going to have is that going to the largest unemployment numbers in 100 years is going to take time to ratchet back up. There's going to be a lot of restaurants, a lot of stores, a lot of businesses that fail. And with people getting, I forget how many, 120 weeks now or something ridiculous of unemployment, it's going to be a slow get back to work job market. And the job market is what determines our demand. The more job growth there is, the more demand we have. And so we need to wait for that. So I think it's going to be about 18 months. We're still going to see another 4 or 5 months of downturn where it's getting worse all the way through September. In September, October, it's going to start to get better. And then it's going to take about 18 months to get fully ramped up. So in that time frame is when we want to prepare for having opportunities and still be selective and buy what we can. Because I think every one of us would want to go back to 2010, 11, 12, 13, 14 and buy everything we could see. So we're adjusting our buying criteria to make sure that we take advantage of those opportunities. And there was something else I was going to tell on that same line. External growth, actually 18 months. Going back to the distributions and what everybody is doing, Right now, the advice from everybody is hold on to the cash, build up your reserves, build them up, build them up, build them up. I think we've got, when we planned on our reserves, we planned on having enough in there to weather some of these storms. And while other people are saying, hold on to it, don't do any distributions, that's not what we're saying. And rather than quarterly distributions like everybody else does, as you know, we do monthly distributions when we do the distributions. So we're going to get geared back up for doing that because I think the market, like I said, will be down for the next few months. It's going to hit hardest in September, August, September. And the reason I say that is that's going to be hardest is because we cannot do evictions until September. So come September, all of the people that have taken advantage of the situation and not paying, come September, when they're finally evicted, they're not going to make up 4 or 5 months worth of back rent. They're going to go find some other place to live. And so there will be concessions so that a bunch of people move out. There will be concessions in the market. I'm projecting that there's going to be 0 rent growth for 2020, maybe some in 2021. But for our new pro forma numbers, we're not projecting any rent growth, at least not any organic rent growth. If there's something that we can do to add something to the property, we might show some rent growth, but it's not going to be the average 4% it's been for the last 15 years. So next one. Well, I guess I got ahead of myself. And these are my predictions. So another 3 months to see the true fallout, no growth, occupancy will still remain high, values drop on distressed assets, causing drop in values. Now remember that one property drops in value, they all do. A rising tide raises all ships. Well, so does a lowering tide. It lowers all ships. So values will drop on the distressed assets, which will cause values to drop on all the properties. So that is going to be one reason not to sell right now. And there's a couple other reasons why selling right now is a bad thing. The first thing is there's great interest rates right now, which is great for debt, but the defeasance, because the interest rates are so low, the prepayment penalties are huge. Just to give you an idea of one off the top of my head, Brookside, we've got a $20,500,000 loan, $20 million loan. If we wanted to pay that loan off, the prepayment penalty is over $7 million. So it's over 30% of the loan value to pay that off on defeasance. So if there are any sales that are going to be happening with any loans like that, they have to be assumptions. And so because they have to be assumptions, that's usually a higher capital investment needed, which will then even it out a little bit, because Fannie and Freddie will require a year. They've tightened up their lending. They require a year's worth of principal and interest, even if you're interest only, principals and interest worth of payments escrowed day one, 1 year of taxes escrowed day one. Now you have to pay your taxes plus then escrow another year. And insurance, the same thing. You pay your insurance, you're paying 1 year ahead of time, but in your mortgage payment, you're still accruing taxes and insurance. They just keep that as extra reserve for their own protection. So anybody that tries to get a Fannie, Freddie, CMBS loan, CMBS is not even loaning right now, but Fannie and Freddie or HUD, on a $10 million loan, there's $1 to $2 million extra in cash needed to buy any properties because of that. So that's going to make buying a little more costly. You will get that back after 1 year elapses. They'll refund that back if you're at the right debt coverage ratio and occupancy, et cetera. But all that means is there's going to be fewer buyers. Fewer buyers means more opportunities for us. And because that's what we want. We want a buyer's market. Next slide. Before we hit question and answer, We are also planning on an open house for Darkor when their offices are ready, and also another open house for the building when the lobby is done and furnished and everything's done in the whole building. So we'll have a couple of those. Julian is developing training programs so that we can utilize our training room all the time. We'll record everything so that it'll all be available for those that are unavailable to come out. We'll only have seating for 50 to 60 people with tables, or 100 people with just chairs. So we're going to do a whole lot more training, because some of you have heard the same stories over and over and over. So we'll do based on different levels of different training for newbies, for experience, for people that just want to hear about opportunities, people that want to learn to be sponsors, taxes, insurance, carpeting. We'll have classes on absolutely everything for your benefit, of which we will not charge for. So hopefully you can come on in, get some education on that, or at least watch those online when we get them online. And let me check my notes real quick. So that is all I had for now. Like I said, I think everything is very, very good considering the crappy time we're in. And Dallas-Fort Worth in Texas is the best place to be. I hope Elon Musk does move Tesla to Texas. That would be spectacular. Yet another Fortune 500 company coming in here. But other than that, I think that everything is going great on the properties. And we've got a great team. And Vicki and Brian have been working 18-hour days, making sure that all of this is taken care of. And our whole team really is. And we've expanded that team. We'll let you know more about that later. But let's move on to Q&A then.
Okay, first question, Darwin, is would you expand on what's going on with the refinance for 1019?
Okay, 1019, you saw the occupancy going up on that. We really want to be over $120,000 in collections. And so I'm going to do my part on that, and I'm going to go rent a couple of Airbnb units this month and go down to Fredericksburg and try and help that income over 120. And once we do that, we can start that refinance. Now, the good news, bad news, just like we talked about earlier, the good news is we're going to be able to refinance. We're going to get a great long-term Fannie Mae loan. The problem is that we're not going to get all the cash out that we want because a lot of it's going to be held in reserves. And all that's going to mean for us is the cash out's going to be a little bit less than we planned because of coronavirus. But after 1 year, all that money that's in reserves will then be released. So we're estimating $800,000 or so that we're going to have to leave set aside. So that'll be in about 12 months after we refinance, we'll be able to get another $800,000 bonus. So it's like doing a supplemental without the fees. So that's where we are on that one. We're also looking at doing a supplemental on Villa Creek, which we started before the tornado hit. And so we'll get that started probably Q4 of this year as well.
Okay, next question, and I'll take it if you don't mind. The question is, does Riverbend have a city resident payment plan option? The answer to that is no. There are local municipalities that are offering that program. The city of Arlington is the only one that I know of right now. The city of Dallas offers a similar program, but in most cases from the city of Dallas, it is back to the tenant as long as they can prove they're using it for their rent. So that still obviously helps us. But the city of DeSoto does not currently have a program like that for Riverbend. Another question here, Darwin. Would it make sense to get commercial loans instead of Fannie Mae loans? Not sure about the rate, but would not have federal oversight as much.
That is correct. The problem, we can either get Fannie, Freddie, HUD, CMBS, or bank loans. Bank loans are typically 5-year deals at the most, and they have higher spreads on their, well, a few things. One is they have higher spreads. Number two, they have lower years in the number of terms, fewer years of interest only, and they are personally guaranteed, so they're full recourse. So a lot of people don't want to, when we start talking to KPs, they don't want to do full recourse. So if we need to refinance, let's just say, for example, 1019, we don't like the terms we're getting from Fannie. That's our only one with a short-term note, which is also where opportunities will come in as short-term notes. So bank loan is only a possibility if the Fannie Mae loan does not look as good as we want. As far as purchasing, then we might, depending on what the property looks like, any properties we might find, we might have to go with bank debt. And if we do, then that's a whole different story. It's something that we have to refinance at some point in time anyway.
Okay, next question. Do you believe there'll be a lowering of property taxes due to COVID-19? We wish.
You know what? That would be an absolute smart thing for people to do. But no, anybody else received their property tax statements? I think I put that in our email this last time. Property taxes on a couple of properties are up as much as 60%. And what it is, it's mainly, Villa Creek, Riverbend, Dallas County C quality properties are the ones that are being hit the hardest. Tarrant County has been very aggressive already, but now Dallas County is doing that, and they look at the value as of January 1, 2020. So COVID has not hit. That brings up another point that I want to expand on real quick. And the way that they come up with those values, which we are fighting all of the values, just like we do every year. But there will be tax increases on all the properties because of COVID. Like I said, we're not seeing a big dip in our revenue. So I don't see a huge dip next year for taxes. But since we're on this subject, I want to remind Brian on something to do. Now, two things. Our payroll protection program, we received money for all the properties to pay their payroll for 2 months. When does that start? What payroll period are you using that for? Was that in part of the expenses you already showed?
No, it is not included in the expenses that you showed. It started on the previous payroll, so it started almost 2 weeks ago, and we have another 6 weeks that'll go through. The one payroll period is tomorrow, as a matter of fact, and then the next 2 payrolls. So we got about another 6 weeks.
Now, this is something that came to my mind just about an hour ago that I have in my notes to talk to Brian about, but I'll let everybody listen in on some of the trickery we use for valuing properties. I don't really care about the overall value of the property right now, except on refinances. But if we're looking at property taxes and wanting to keep that low, the payroll protection program, of course, we're going to have to check on this with accounting and everything else. But if we take that money that we receive for the payroll protection program, that is not operating income. That is not income. That's technically a loan that would go on our balance sheet. Or if we want to put it as income, it would go below the line. But we still have the expense. So we will still record the expense on our financials so that we can keep the expenses higher on the properties, so that we can have lower NOI so that we can properly fight the tax value. Now, you want high NOI if you're going to refinance or sell. You want low NOI if you're going to be fighting property tax values. So because we're not looking at selling on most of them, then we do some accounting tricks, which are still legal. It's not doing anything illegal, but it's just how you record them can affect the value one way or the other. So, next question.
What is the current plan and timing for the Villa Creek refinance?
Villa Creek, Q4 of this year is when we're targeting for, but we've got to see what's happening in the markets. And we need to have all the units up and occupied and have that income because what lenders look at, like Fannie Mae, when we look at doing a refinance on that, they look at the income, they look at the actual trailing three income, and they look at pro forma expenses. So the actual income we want to show very high. Expenses are not even as important in that particular equation, but the income is something that can't be adjusted. We can adjust our budgeted expenses because we can say, hey, we're lowering payroll, or we're lowering this, or we're raising taxes, whatever it is. So we need to get that 3 months of history under our belt, both on Villa and on 1019. So we need that history to be able to get the refinance. Now, it's more critical on 1019 because we have a loan coming due. Villa Creek, we can afford to wait if we need to, depending on what the terms are, but that will be a supplemental, not a full refinance. That would be a supplemental, which is a second trustee basically with Fannie Mae to pull cash out.
Thanks, Darwin. Have you considered using adjustable rate loans for the new projects or refis that would have rate caps, as these loans would only cost a small percentage to prepay?
Hi, Nikolai. Thanks for joining. Yes, and we actually have looked at that, and the cost benefit. I mean, if interest rate, we never knew that interest rates would stay this low for this long, and a cap. What you do on a variable loan like that, you get a variable, floating rate, and it has a floor and a ceiling, but the ceiling is only on there if you pay an extra fee. And quite honestly, with interest rates at 3.5% right now, yes, you can go ahead and probably get a floating at 2 3/4. I feel safer having a locked in low interest loan without having to deal with that extra buy down, because I also don't know how it affects if we try to sell on a assumption or something along those lines. I just like to have I just like to lock in the debt just for safety and security.
Thanks for the questions. I'm going to take this next one. Are late fees prohibited on all properties, and does this lift when the eviction moratorium lifts? The answer is they're only prohibited on the properties with federally backed mortgages, and that's all of ours with the exception of 2. And yes, the waiver of late fees does also goes away with the eviction moratorium goes away. Okay, Darwin, got another question for you. For non-paying, or maybe for me, for non-paying tenants who say we can't evict them, I heard legal opinions that we as landlords can ask for proof if they were impacted due to COVID. If they can't prove, we can serve legal notices and even file legal claim for damages, unpaid rent, as opposed to evictions. While it is not a great option, serving legal notices to tenants could cause some of them to pay. Have you considered? Again, just so that you know, on these federally backed mortgages, we cannot file evictions. I know that there is a situation. Yes, we do have the ability to ask them for proof if they were impacted. Here's the problem with that, regardless of their reason for not paying. So it doesn't matter whether they were impacted or if they just say, I'm not going to pay. I don't want to. I'm not going to pay. There's really nothing we can do about it. So we don't feel like it's worth asking if they were impacted by COVID. Having said that, also understand that there are local municipalities and or counties that is, that the courts are not even open. So yes, we are actually filling out the paperwork for all of these, and we're doing our due diligence with that, but we cannot file them in most cases, even if there wasn't a moratorium, because the courts are not open at this time. Okay, on PPP, are expenses applied to forgiven loan are not deductible? Okay, we've answered that. Darwin, do you think eviction restrictions will be extended, is our last question.
Will eviction restrictions be extended? They won't be. They're already extended to September. And you've got to remember, each court, each judge has a lot of leeway in their own court on what they will accept or what they won't accept. In Texas, the majority of the courts that I've seen are pretty simple. Did you pay your rent? No. Okay, you're evicted. It doesn't matter what your reason is. However, courts have become softer the last few years, and they still can. If somebody comes in there with a sob story and says that they, well, that sounded callous, but if somebody comes in there with and explains their situation, and the judge feels like it's okay, the judge can point blank give them an extra week, 10 days, 30 days. The judge can do anything they want. Generally speaking, in Texas, it's been very good where we didn't have to do that. So no, I don't think that that's going to be that big of an issue. I don't think they're going to extend that. It's already extended out too far. Apartment Association is fighting it. But what really pisses me off is we really do want to help. We're there to help our residents. The ones that we want to help, those that are there and being honest and upright. And hey, if I had a problem, then I would want to get some help. But the problem is there's some people that take advantage of the situation. And we've got one property that 30% of the residents point blank said, screw you, we're not paying, you can't do anything about it, and so leave me alone. Another one put a note on their door that said, look, if you keep harassing me for rent, I'm going to call Channel 5 News. And another one said, hey, I've got 10 grand in the bank, but I don't have to pay you, so I'm just going to hold off. And so you have all types. You have some people that completely struggle, that sell their cars so they can pay their rent. And it's those people that we want to help, those people that are being honest and upright and truthful, and we want to help them. The problem is the bad apples make it difficult for everybody. And so, if there's a legitimate reason, then we want to work with them. If there's not, then for me, I want to hang them up by the toenails. But that's a different story.
Okay. Well, that ends our questions. I'm gonna close it here, and then Dawn, I'll give you a moment too. Just kind of recap. I hope everybody has seen with the property updates tonight the continued good performance of the properties. It's not as great as it could be. We're on a really great trajectory and hit a little blip with the coronavirus issues, but we still have positive performance at the properties, and that's great news for all of us. As you saw, we got some great things going on at Valley Center, and as Darwin said, we've got a couple of spots left here to close that out. So give David a call or an email at david@darwingerman.com. As Darwin said too, we're always on the lookout, and he really made this clear. How many properties if you could go back now to 2010, 2011, 2012, what would you have bought at that time? And we all say we should have bought more. So that's the reason for putting the fund together and the opportunities, and Darwin's doing a great job leading us on that. And
well, let me expand on that for a little bit, Brian.
Okay.
Back during those times, I was still analyzing them because we wanted to have things that had cash flow, and because cash flow was the whole idea. But we missed out on buying things that were available at 50 cents on the dollar that didn't have any cash flow, or that were 65% occupied that didn't have cash flow. So now we're going to adjust that so that if there's something that's strategic, a great location, something well below replacement cost in a growing or decent area. So we're going to adjust that to take advantage, because we started, if you remember, I got into the market in 1989 when we bought a property. We were in California and bought a property in Texas. And in Texas, nobody wanted to buy anything because the crash was in '86, and for 4 years it went down. And so nobody wanted anything. And we came in here with a client and spent $120 million and bought 5,000 apartment units over 4 years, all cash. And that's how I got my start. Well, that was the end of that '86 crash. So we went through that part of it. Then we also had corrections, 9/11 in 2001, and also a tech bubble crash, and 2008 with that Great Recession. So we've been through a bunch of these crashes, and in every one of them, you go back, ask any old timer in the business, every one of them says, please give me one more crash. I swear I won't screw it up this time. And what they mean by that is, I will be more aggressive on finding opportunities, and quite honestly, be more expressive on screaming from the rooftops. You need to invest now. You don't want to wait until 2018 before you started investing when you could have started in 2014. Don't wait for it to go way up and then start investing. Invest while it's low also, which is why it's been so hard for us to buy, is because everything's been so overpriced. But now there's a correction in place. Now is the time to invest. Think about going back and investing in 2013, 2014, 2015. Everything you bought has tripled in value. Every single thing that was bought during that time frame. So we want to make sure that we take advantage of that, and I am going to do everything I can to convince you of that, because I've seen it too many times for people that are missing out on these huge gains. There's a huge transfer of wealth going on during these corrections. There's a huge transfer of wealth right now just in the whole economy. When we're talking about taking a huge hit in the economy, and Walmart can stay open, but your local retailer can't. It's ridiculous. I'm going to get on a soapbox. I'm sorry. I got to digress before I get too crazy on that part of it. But bottom line is, please, you got to know, I've been through all these crashes, and every single one of them, that's where you make your most money, is right after a crash. And that's when it's scarier to get involved with. But give it another 3 months, and you'll start to see a lot more deals coming out. And the ones that are going to be at risk are people that were the fix and flip operators, people that had short-term loans, especially bridge financing, that they have to get out of, people that are undercapitalized or over-leveraged. They are all in a bad position also. So those are where the opportunities are going to be. Undercapitalized, not enough experience, the fix and flips, the short-term debt, those are going to be where the opportunities are. If you're in any of those deals, I suggest you get on the phone with your sponsor or your syndicator and see what their plan is to make sure that they're properly funded in case this keeps on going down, just in case. And we do a lot of education saying what to look for in other people's deals as well as ours. Exit cap rates was one of them, the proper funding, etc. We are going to continue to train you on what to look for in all deals, mine, everybody else's, on why they're good, why they're bad, and ways for you to protect your hard-earned capital. We are always going to be here and tell you the good, the bad, and the ugly of where we are, what's happening, and keeping you informed. We're always going to keep on educating so that you know how to read these things, how to look at them, how to understand what you're investing in, even if you're doing something completely different. Then we're going to keep on doing that. We are here for you, and our growth depends on you. And in that same vein, we say it every day. It all depends on the performance of the property. That's our best marketing. That's our best way to get out and tell our story, is showing good returns and protecting your capital. And we will always continue to do that. So we thank you so much for being partners with us. And if you want to learn more, always reach out to any one of us. And I want to thank you all again for your trust and your dedication, and it does not go unnoticed. So thank you very much.